Mag 7 earnings are turning into a capex story. Four of the biggest US tech companies, Meta, Microsoft, Alphabet, and Amazon, together have forecast capital expenditures that could reach about $650 billion this year, a flood of cash for data centers and AI gear. The push is based on the same core premise. Tools like ChatGPT and rival AI models will play a bigger role at work and at home. Fresh AI launches like Anthropic's Claude are adding urgency to the moment, reinforcing why big tech is racing to scale compute and infrastructure. And now comes the hard part, proving that the spending actually works. For more, I spoke with Constellation Research CEO Ray Wang. So, with capex exploding across big tech, does the race to provide AI compute end with one dominant winner or multiple?
We're gonna have a couple winners, but it's not gonna be distributed equally. And you can see already Google spending 175 to 185 billion. They see a pathway to get there. We've got Amazon saying, no, we're going to spend 200 billion. We're going to double the ante. What looked like, Microsoft wasn't spending enough at 80 billion. This is going to be quite interesting to look at. So how much CapEx do you need to get to? Is it AGI? Is it more than that? Are we going to get something in between?
And Apple just posted its fastest growth in years, driven by the iPhone 17, with iPhone sales up 23% to $85 billion and sales expected to grow 13 to 16% this quarter. How much AI progress does Apple actually need to show to keep investors confident on top of that strong hardware momentum?
Well, I think the hardware momentum is the first part, right? The aspect of AI success is going to come through what they do with Gemini and other models. So with Apple, it's really about AI at the edge. What we're getting is the ability to actually access any model to be able to apply AI to actually get to next best action, whether it's a recommendation, whether it's your ability to manage your health. That's really where they're going to shine. And of course, you're absolutely right. They had a stellar year in stellar quarter, especially in the refresh, and more importantly, the AI refresh that's about to come. But we still have new devices coming. We're not sure exactly what they're going to launch next. Is it a foldable? Is it not a foldable? That's the question people are asking. But more importantly, is the Indian numbers are up, the Chinese numbers are up, and Apple is not just your regular smartphone. It's always been a luxury good with an amazing services.
And Wedbush calls 2026 the inflection year for AI at Microsoft. Even as CapEx stays elevated, what really has to go right this year for Microsoft to convince investors that the spending is worth it?
A lot of it really comes down to their forecast. They've got to continue to forecast their ability to generate revenue, and then the street won't punish them for their investment in AI. As Dan Ige probably said, I mean, this is going to be one of these crazy years for AI inflection. But what's happening right now is a seminal moment in AI. What we're seeing is the winners are going to double down on infrastructure and compute, and it's a race to get compute costs down. This is really a battle for energy, none more than anything else, because at energy prices at 15 cents a kilowatt hour, we've got to be able to take that down to 10, take that down to 6, because it's all about compute costs.
Google is being viewed as an AI leader, and its stock performance has outpaced several other Mag 7 peers. What do you think investors are really rewarding in Alphabet's strategy here?
Well, they've got chips all the way to agents. And because they're able to do one Google, the entire ability to actually embed AI throughout all of Google is what makes it very appealing. Even when you think about Waymo, that's still, at the end of the day, the ability to deliver Google at Google scale. So if you have everything vertically integrated, it's a lot easier. Just like Apple's everything vertically integrated, it's a lot easier to deliver AI from all the models you have to all the devices you've got.
And Meta's Q4 earnings topped estimates and issued stronger than expected sales guidance. After this earnings report, what do you think investors are more confident in at Meta? The ad business today or the AI strategy over the next couple years?
Their ability to consistently generate, if I remember, they were 25% or 24% year over year on ad revenue. Their ability to continue to generate ads means they have the permission to go invest in whatever they want. And if it's going to be AI, it's going to be a place where investors are going to be very happy because Meta has the best internal use of AI. They've been reducing their cost structure better than anyone else. And so they're being rewarded for their investments in AI.
And to wrap things up here, is all the crazy capex a headache for the tech titans or just a massive payday for the infrastructure plays? If you follow the money downstream, which stocks are actually winning the AI arms race?
The stocks that are winning are the ones that investors can see a path to dominance. And just like these companies were dominant in Mag 7 in the digital world, they plan to be dominant in the AI world. The stocks that are massively undervalued are the SaaS stocks. I think there's been a crazy sell-off that makes no sense, but they will come back.
Ray, thanks so much for the insights.
Hey, thanks a lot, Claire.
NVIDIA reports earnings February 25th, and investors will be watching GPU sales that power the entire AI buildout. The company expects fiscal 2026 revenue of $213 billion, with nearly 90% coming from data centers, making its result one of the clearest reads on whether AI demand is holding up. And Tesla is more than doubling its capex this year and investing $2 billion in XAI, while shifting focus from slowing auto sales toward robotaxis and humanoid robots. Investors are weighing how quickly massive spending turns into profits. The Mag 7 are prioritizing scale and infrastructure now, even if it pressures margins in the short term. And the market is still deciding how much patience it really has for that trade off. For Investors Business Daily, I'm Clara O'Connor.